Good morning and welcome to today's webinar chat with our economic consultant, Michael Hughes. For those that don't know me, I'm Gordon Kearney, the Managing Director here at Fiducia and also the Chair of our Investment Committee. Today's format is relatively informal, whereby I shall be asking Michael a series of questions about the economic recovery, the pandemic, and the risks as he sees them. If you have any questions, feel free to submit them on the icon below, which is a Q&A, and I shall endeavour to put them to Michael after his chat. So without further ado, Michael, in the last interview, you spoke about the likely economic recovery this year. Is it going to plan?
Well, good to be with you again. Yes, it is. If anything, the economic forecasts have actually been revised up since we last spoke. Obviously, Europe is lagging behind a bit because of the increase in the infection rates. But in the case of China, the US, the UK, the second half of this year particularly, but even now to some degree, you are beginning to see a bit of a recovery. And in the case of China, they have already returned to the trend rate of growth that they had before the pandemic. So they have made a pretty full recovery. Now we're in the middle of the corporate earnings season for the first quarter, and we've had over 300 large companies reporting. And expectations were pretty high for a profit recovery, but they've come in 20% higher than those very high expectations. So the recovery in corporate earnings is very strong, and the economic growth numbers, I think, as we go through this year, will equally prove to be strong. I think one of the consequences of that is that the talk that we had towards the end of last year about the possibility of negative interest rates seems pretty unlikely. If anything, central banks will be having to plan to withdraw some stimulus over time. The Canadian Central Bank is the only one that's given notice that it will be looking to raise interest rates next year. Everybody else is being a little bit more cautious about that. But the risk of a negative interest rate, I think, is pretty low. It might be worth just reflecting on how those work, because Switzerland has been the one country where negative interest rates have been used for some time. Actually, what happens there is that interest rates are actually set at zero, but then you'll have a deposit charge. And that charge varies with the size of the deposit in your bank account. So it ends up being a negative interest rate, but it's effectively a charge that applies to your bank account. And should we ever get in a position here of negative interest rates, I suspect we'd have a very similar setup. But I think that's looking pretty less likely. So the story in terms of economic recovery this year and indeed next looks pretty strong.
Thanks for that. I mean, we've never had a pandemic before, and we're all sort of learning as we went. But what do you see as the lessons to be learned from the pandemic?
Well, I'm taking 4 lessons from it. The first is that the technology that has been used to design and produce these vaccines looks, if it's feasible, to be applied to other diseases such as malaria, HIV, maybe some forms of cancer. So it is transformative. And the fact that it's not just going to be affecting the COVID, but on a much wider scale, I think is really exciting for the healthcare sector. And if you look at the Human Genome Project, which dates back now to the year 2000, that too is starting to yield some very interesting results, which will come forward within the next few years, basically allowing medicines to be individualized, personalized to people, and hence using their DNA setup to actually design something which is very specific for them. So the combination of that and the introduction of telemedicine, where we're getting more consultations over videos or telephones, I think is something that we will be living with for a while. So I think the healthcare sector has been transformed. The second lesson I take is that the size and the scope of government is a lot bigger. Clearly, they're spending more on healthcare. Healthcare as a proportion of GDP was about 5 to 6% back in 2000. it's going to be of the order of 9% this year and continuing to rise. Part of that's down to the aging population, but part of it is also down to a commitment to use the new technologies to a wider good than we've seen previously. So by virtue of that, government borrowing is going to be higher for longer. And that obviously raises the spectre of whether they will need to raise taxes over time to rein that in. Well, I don't see them applying an austerity program in the way we had after the financial crisis. In the case of the States, as we've seen in the last day or so, they are providing part of the finance for their stimulus by raising capital gains and higher taxation. And that's a redistribution of that taxation to the lower paid and the middle wage earners. So it's a redistribution, which actually is a net stimulus, because the people that are beneficiaries of that tend to save a bigger proportion of their income. So I think the role of government is something that we will have to accept is going to be on a much bigger scale than we've had previously. The third lesson I take is the relative power of Asia. China, South Korea, Vietnam, Taiwan all went into this pandemic first, but they also dealt with it more effectively and came out first. And as I said, China is already back on the path it was on before the pandemic struck. And if you look at the way that the Asian economies are now able to exploit their expertise in the semiconductor sphere, because semiconductors are now coming into all aspects of our lives, be it from electric vehicles right through to electronic gadgets. So they have a much higher dominance. And over the next 10 years, there's something like $500 billion worth of new companies coming to the Asian markets. So though we've become familiar with some of the new Asian companies that have come through very quickly and are very large, actually there's a whole range of new ones coming through over the next 10 years or so. So the relative power of Asia has been enhanced. And the final lesson I would say is that I think companies had to learn to be more resilient. Companies have divided between heroes and villains in this pandemic. And the guys who've come through strongest are the ones that had the strongest balance sheets. And I think that one of the lessons here is that you never know what shock is coming down the line, but you need to have the financial and corporate strength to withstand that. And I think that lesson has very much come on board. So you're finding that boards and management are working much more closely together to have crisis management subcommittees and being able to make sure that their balance sheets are strong enough so that they have the reserves to withstand whatever comes through. So I think there are some pretty important lessons that have come through and that we will have to live with for a while.
Thanks for that, Michael. Going forward, what do you see as the greatest risks to our portfolios, and how should we be addressing those?
Well, if this economic recovery is as strong as it's looking as it's going to be, we're going to find that the level of spare capacity is going to reduce relatively quickly. The UK, which is certainly slower than Asia, looks as if it's going to be back to where it was before the pandemic by the middle of 2022. So in the second half of 2022 and thereafter, we will start to have some capacity issues. So there is a danger over the medium term that inflation, which has been very subdued over the last 10, if not 20 years, starts to come back and to be higher than the government's target. And many central banks have basically said, well, we're prepared to run a higher inflation rate in order to get this momentum going. And if that's the case, then we have to protect ourselves against there being a higher inflation rate. Now, clearly the areas that are most sensitive to that are bonds. And bonds in the past have been a source of good income, but they've also been a source of diversifying risk away from equities. Clearly at this level of bond yields, they can't do that. So we're having to look at other asset classes, A, to get that income, but also to get the appropriate diversification. And things like macro market neutral hedge funds, things like infrastructure, are the sort of things that replace bonds in the portfolio. But over time, I would expect us to change the balance between financial assets and real assets in favor of real assets. And by real assets, what I mean is infrastructure, real estate, commodities, and market neutral strategies, so which give us the sort of diversification that you need to keep the risks down. And there will be some equities that actually benefit from a slightly higher inflation environment. But if we go into a world where the inflation rate is permanently higher than the economic growth rate, then you start to see that markets get derated, even equity markets get derated. So we have to be on the lookout for that balance between growth and inflation deteriorating. That's very unlikely to happen over the next year and possibly not even in 2022. But over the medium term, that is a risk and we would have to adjust accordingly.
Okay, thanks for that. Michael, we got a question about the biggest threats to growth in the next couple of years, but I think that your last answer there sort of typifies that and explains it. To the attendees, does anybody have any other questions that they'd like to put to Michael?
Can I just make an extra point there, Gordon, which is, I think, relevant to that question? I don't see governments reining us in the way that they did after the 08-09 financial crisis, i.e. a new austerity program. There is a risk of higher capital taxes because there is a big budget deficit to rein in before the next election. So just as we saw in the United States, where capital gains taxes were raised in line with the highest rate of income tax, there is a danger that that will happen over the next 2 or 3 years here in the UK. But I don't think that it will be that quick or that aggressive. What I do think governments will be doing is using regulation to rein things in. You're already starting to see antitrust legislation be introduced in the States, and to some degree there's talk of it here, to actually make some of the very large companies now more responsible for what they are up to, and in some cases forcing them to reduce their size by selling off some of their divisions. And you'll see,
Michael, are you specifically referring to tech, the big tech companies there?
I am particularly thinking of the tech companies when I say that, which have clearly really grown in capital values dramatically over the last 5 years, and obviously through the pandemic. Equally, you're starting to see governments look more to the minimum wage and benefits for members of the gig economy. So adjusting the balance between profits and the return to labour. And that too is something which I think we'll see a lot more of. So by and large, I can see governments using regulation rather than taxation, and by cutting public spending to actually rein things in when the economic recovery is fully established.
Okay, thanks. I mean, we touched on technology there. I've just had another question come in about tech and the extent to which it's a bubble, and your views, if you have any, on how blockchain, not necessarily Bitcoin, but blockchain may change the sort of the monetary system that we use in the 21st century. Well,
firstly, I think some of the tech valuations are high, but then if you look at the earnings that are coming through at the moment, you can understand why people are prepared to pay quite a premium for those. I think the issue, frankly, is whether those valuations can continue to rise. My suspicion is that they're more likely to hold in, provided those earnings continue to come through as they clearly appear to be doing now. I've got some reservations about the whole Bitcoin and digital currency regime, partly because this is an unregulated asset class, and I think for our clients to buy unregulated assets isn't a particularly low risk thing to do. But equally, these things can actually be brought to account very quickly with the signing of a document.
Yeah.
Central banks can actually outlaw these if they get out of control. And the one thing central banks don't want to happen is for currencies to be issued that they're not accountable for, because that can actually undermine the whole financial structure. So I can see central banks introducing digital currencies. And indeed, the Central Bank of Sweden is probably leading the field in an experiment that's being watched by other central banks. So I suspect we will hear more about this, but I don't think that some of the new players on the block will be allowed to get totally out of control without central bank intervention.
Did I read correctly that Turkey has outlawed Bitcoin? Did you?
Yeah, some of them have outlawed it, but it's a very hard thing to do by yourself because it's a global asset class. You really need all central banks or all governments to actually agree to do that.
Okay, I've got one final question for you, and then we'll bring this to a close. Do you have any particular views on the energy sector and the transition to renewables and hydrogen, and how you see that playing out in the sort of coming years?
Well, that is actually an area that's part of our real asset choice, because new sustainable energy is clearly gathering huge momentum. It was even before the events of the last year or two, but the commitment that is being made to a zero carbon environment now does look as if it's got real momentum. And so the sustainability of the energy source is a clear development. But remember, going to a green economy world is also a commodity intensive world, because we have to build the new infrastructure to accommodate the new technologies. So we've got a commodity exposure within our portfolios to take advantage of what's happening to the coppers and the platinums and the aluminiums of this world, because, and to some degree the semiconductors, because these are the commodities that will be in demand in order to provide the infrastructure that is now being designed for the next 10, 20, 30 years.
Okay, well, thank you very much for that, Michael. Fascinating as always. I'll draw this to a close. If anybody's got any subsequent questions, feel free to email me and I'll endeavour to get them answered as well. So thank you very much, Michael, and goodbye.
Good
Have
to
a
see
nice
you.
holiday weekend.
Thank you.